Your learning will be much better if you read what is given, what is mentioned, make out, do certain calculations and discuss those calculations in the class. Seek clarification to them in the class. In this way, learning will be much better. But you do not seem to pay attention to, I don't find any use of sharing with you anything in advance. See, whatever I wish to discuss, the entire 10 classes, 5 classes, whatever number of classes we will take to complete this unit, maybe 7, 8 classes. But anyway, now pay some attention and to come up with an answer tomorrow. If not, see, for me, explaining it is a minute's work. I can explain to you instantly because I know because I have been doing it for several years. But this is not, or this should actually not be the way. If this is the case, let me write the answers for all of you. So make some efforts, and when you, even after trying sincerely, you are not able to follow, then my intervention should be there. So try once more. Now we go on to the next slide. That is, once the data has been tabulated like this, we have got this. Look at the last column, net inflows. This is our total of net inflows, 11,50,000. What is the cost of project? What was the cost of project that we assumed? Can you recall? Cost of project assumed was 5 lakh. Suppose we assume 5 lakh and this is the return. Assume, even if you don't recall that it was assumed as 5 lakh, assume any figure. Let us say cost of the project or our initial investment was 5 lakh. Listen to what I am saying carefully. In this entire exercise, our initial outflow, sorry, the money that we are going to spend is 5 lakh. Will you accept this project or not? It seems a profitable one or not? Yes, come on.
Yes, sir. We
Why
will
is
accept the
it?
project.
Why are you considering it as profitable one? Because
So, when we subtract outflow from inflow, we get profit of 6,50,000.
6 lakh. This is the answer. Suppose the outflow was not 5 lakh but 8 lakhs.
So, it's still profitable.
Okay. Outflow is 11 lakh.
Is still profitable up to 11 like 50,000.
Fine. Any other answer from any one of you? I'll repeat the question. I have assumed different outflows. At each outflow, you have said the project is profitable until the outflow is until the outflow reaches 11 lakh 50,000. Even if it is 11 lakh, the amount the outflow is 11 lakh. Still, it is profitable because we are saving 50,000 rupees. Do you all in the class, whatever are the numbers as on date, as of now, I don't know how many of you have joined the class so far. Only 18. Okay, no. Yes. Oh, you are. Oh, these are the problems with the technology. I have, I put it on the auto mode. If they were trying, I am open to everybody, accessible to everybody. Why should not they even call me? Whatever discussion took place, majority of them have missed it. Now there are 40 people. See, you may also be hearing this beep sound every time, every second, minute, every second, third. See, I am doing nothing. These are all being admitted automatically. Could be because we need to move cursor or something. I'm not, sure about it. Now, right now, I see on the screen there are 44 people. 45, 40. Okay. So people should have at least called me. Just one second. Let me hold on for a minute. Let me bring my phone. I'm just going and getting my phone. Yes, there are messages in the phone that people are trying and they are not getting. But one thing which is very strange, somebody who is writing at 8:07, he is also saying that he is trying. But anyway, uh, you could have called me because the phone was placed at a different location. So I thought that people are not trying to get in, or maybe are not joining. Right now, there are 48. Yes, there are 48 of you have joined. The question where I was, it was that suppose you, I ask you that the investment is 5 lakh, you said it is acceptable, investment is 8 lakh, still you said project is acceptable. Do you all agree, all 49 or 50 of you who are present in the class, do you all agree that with her answer, or you have something else to say?
Sir, if you are investing in the starting, sir, am I audible?
Yes,
Sir, if you are investing at the start, sir,
yes,
and the sir inflow that will be coming, sir, throughout, like sir, on the different states, like on in different years. So we have to calculate it like on one scale, like I mean, sir, net present value of money. We
yes,
have
yes.
to
That is
convert
the
it.
that is the correct understanding, that on the face of it we cannot say that the project is profitable. The project is profitable. We cannot say because the investment we are making in year one, you assume this x1, let us say as 2017, then 2018, 19, 20, 21, and 22. The total money you will be receiving in different years will add up to 11 lakh 50,000 in 2022. Okay, can you elaborate just maybe one or two more sentences? Why is it that it is not at, I mean, it will not be attractive unless we make certain calculations? Because
Because of the sir, the purchasing power of money will be reduced over time. So sir, like
okay,
what
very
will
good,
be earnings sir afterwards,
very good,
if you
very
can.
good, very good. Every time you receive money in subsequent years, its value will not be the same as, or its value cannot and should not be compared with the value that we spent, or that was our outflow 5 years ago. Therefore these two figures are not comparable. If you compare something that you spent in 2017 with something that you are receiving in 2022, these two values are not comparable. Therefore you need to discount them. This is one concept. The point I was trying to bring here is that now, after having adjusted all the inflows, we shall use methods based on which we can find out, based on which we can see that how the project should be evaluated. This part has been discussed in the subsequent slides. Before several of you have joined, there was this hiccup that it is auto, but still at times you're not able to join. See, the best course of action for that would be that we complete this joining business up to 8. When you can join at 8, I mean, you can join at 5 minutes to 8 also, or 3 minutes to 8 also. It is irritating for me also, it is difficult for you also. To let us complete the joining business by 8.8. 8 means 8 o'clock, and then we move on. You will also be at peace, and I'll also not be able to divert my concentration. If try to do it from tomorrow onwards. So when several of you were not in, see, it is 8:17. Write down your names. Let me make sure that you behave the way you should. I'll adopt it. I'll stop it. You do whatever you feel like. I have no problem. You can do whatever you want. Complain to chairman or dean or something. I'll stop entry at 8.00. That's it. No complaint. Nothing, because GPS is there. There will be no two different timings in the in joining. What is this way? When several of you were not available, I asked a question, look it in the slide and then answer those questions. Okay, come back to the discussion that we were at which I did this, diverted. So we have several methods based on which we evaluate our inflows and outflows. Those can be broadly divided into two categories: traditional methods and discounted cash flow methods. Traditional methods and discounted cash flow methods. Among the traditional methods, we have two categories. One is known as payback period method, and the second one is known as accounting rate of return method. I have denoted with A1, A1A, or 1B. That is part A of serial number 1, part B of serial number 1. Another methods which come under the category of discounted cash flow methods, we have three: NPV method, IRR method, and third one you make correction. 2C should be this this only method I have written. You say this present value method. This we make some index, or we prioritize our this one known as capital rationing kind of a thing. So there's the exact name again that we use, known as profitability index method.
Sir,
Sir, are you sharing any slide?
yes,
So can you see the slide?
No, sir.
Okay. Then let me go back to the one. Can you see this slide? Can you
No.
see this?
No, sir.
The slide is moving or not?
So can you again present?
Okay.
Sir, it's
There is
stuck, sir.
Moving or not?
Sir, I think there is some sort of
No,
technical
sir.
error. Can you represent the slides?
Okay. I'll do that. I'll stop presenting and then present once again. Is it visible now?
Yes, sir.
Yes, sir.
Yes, sir.
Okay, we'll continue with this one. So I was explaining you that there are some methods based on which we make these evaluations. That is, our investment is so much and our inflows are so much. Is it acceptable or not? So there are methods I have listed. One is payback period method. One is accounting rate of return method. These belong to the group known as the traditional methods. Then we have another method known as discounted cash flow method. In this we have three categories: NPV, IRR, and just add one more word before 2C, that is profitability index method, or in short PI method. So just make a change in your screen, or maybe somewhere later on you can correct it, that in this discounted cash flow method under third category 2C, the name of method is profitability index method, or sometimes known as capital rationing. Once we are through with that, we will spend little bit time on discussing the assessment of risk in capital budgeting decisions. How do we incorporate risk? How do we assess the risk also? How do we quantify the risk also in capital budgeting decisions? Now we will learn one by one about each method. What is this method? Using this method, how do we evaluate the financial decision? How do we take financial decision like the one we just talked about? What did we discuss? That we are spending 5 lakh, 8 lakh, any amount, and this will be the inflow over a period of time based on these two figures, two sets of figures. Should the project be accepted or rejected using one or many of these methods? So I'll start with the first method, that is the the payback period method. Has the slide moved?
Yes, sir.
Yes, sir.
Okay. So I'll be discussing with you first method, that is payback period method. With respect to each method, several I have listed, at least 5 I have listed. With respect to each method, what should we know? What is its meaning? How do we calculate? How do we take a decision? What are merits of these methods and what are limitations or demerit of this method? In all, how many methods have I put it on this slide? In the earlier slide, 5 methods. With each method, these things should be known to us. Now start with the first one, meaning. What are the meaning of payback? What is the meaning of payback period method? Look at the word payback. It means in what time frame, in how many number of years will you get back your money, or in other words, will this project pay you back? Suppose you invested 1 lakh rupees and you are receiving 10 lakh rupees, but 1 lakh rupees are coming in first 2 years. So payback period becomes 2 years. So whatever number of years or months or days a project takes to recover original outflow without any discounting, without any time value of money, without nothing, was simple calculations. Invested so much, received so much. Let us see how long it is taken to recover original money, the initial investment. It becomes payback period. So the meaning is clear. Then how do we calculate? I have given here a cursory illustration. In the subsequent slide, there will be more and organized illustration in various forms. Look at look at this paragraph here. Assume that relevant outflow is 1 lakh. Now, what is relevant outflow? I need not explain here because we have spent enough time earlier. How do we arrive at the meaning of relevant outflow? Similarly, relevant inflows in the coming years are, says, let us say life is 5 years, and inflows in 5 years are 20,000, 50,000, 36, 44, and 30,000 respectively. Before I proceed, what are the total inflows that you are receiving in 5 years? What you are receiving in 5 years? What are the total inflows?
So 1 lakh 80,000.
1 lakh.
20,000.
How much?
1,80,000.
1,80,000. Correct. So apparently, if we do not know that there are methods, if we do not know time value of money, if we do not know all these concepts, apparently your outflow is 1 lakh and inflow in 5 years is 1,80,000. So apparently it is acceptable because you are receiving more than what you have spent. Okay. Now apply the concept which is available on your slide, that is payback period. How long are you taking to recover your total money? In first year you are receiving 20,000. At the end of second year you have received 50. So how much in all you have received? 70 up to second year. In third year you are receiving 36,000. How much more did you need to recover? Because up to second year you have recovered 70, so you need to recover another 30,000. But you are receiving 36,000 in the next year. That means every year you are receiving 3,000. So 30,000 you will recover in 10 months. So payback period of this project becomes 2 years and 10 months. I have explained also, in second year, in 2 years we have received 70,000. We need 30,000 more. In third year we are getting 36. So we shall get 30 in 10 months. So the payback period with the given data is 10 months and 2 years. Look at more illustration in the next slide. Just concentrate on project X only. Outflow is 5 lakh. What is this 5 lakh? It is relevant outflow. What is 1 lakh? Relevant inflow. What is relevant inflow? Subsequent slides, earlier slides, we have discussed that we have gross inflow. From that, we subtract operating expenses, we subtract depreciation, we subtract, several things are subtracted, added, taxes are subtracted, depreciation, several calculations are made. Then only we arrive at this figure. So your inflows are 1 lakh, 1,50,000, but something like that, which is appearing on your screen. What will be payback period? We need to recover 5 lakh. One we have recovered here, 150 here, 250 here. By the time you reach here, total becomes 5 lakh. How do you do it in reality? You can add one more column here and make cumulative calculations. When you go for cumulative calculation, by the time you reach a figure which is equal to your outflow, it will be your payback period. So I have calculated payback period for all three projects X, Y, and Z, and which is available on your screen. You can make these calculations, you can verify these calculations and decide. First of all, verify these calculations and then decide of these three projects, which one will you recommend and why. As a first step, do you agree with the calculations which are available on your screen?
Yes, sir.
Look at project Z. Do you agree with the payback period calculation?
Yes, sir.
Yes,
Sorry?
sir.
Yes, sir.
See, how much do you need to recover? 5 lakh. How much are you recovering? 1 lakh in first year, 1 lakh in second year, 1 lakh in third year, and 2 lakh in fourth year. So when you reach fourth year, total money you recover is 5 lakh. So payback period becomes 5 lakhs. 4 years, because in total 4 years, neither months nor days, you are recovering 5 lakh rupees in 4 years. So payback period become 4 years. Here you need to make certain calculation proportionately. You have recovered 4 lakh up to second year. So how much more money you need to recover? 5 lakh.
1 lakh.
You are recovering 96,000. That means you need another 4,000. Now in fourth year, you are receiving 1,04,000 in 12 months. To make proportionate calculations, it will give you certain number of days or month, or a combination of them. Now, once you are satisfied with the calculations, tell me which one of these projects will you recommend for your company and why?
Sir, the Z1 will
You
Sir,
will
be
that
recommended
you will recover Z because
because it has total amount 9 lakh rupees.
total amount is
9 lakh.
9 lakh. Right now,
sir, based on the cash,
based on, say it again. Yes, come on.
sir,
Come
based
on.
on sir payback period method, yes. Sir, based on sir payback
Yes,
period, it should be sir X,
this
because
is
sir it's
what
paying back in 3 years only.
this is what I was trying to go. What are we discussing right now? We are discussing a method known as payback period method. So we are discussing payback period method. So what does payback period say? The time in which you will recover. And how do you take a decision? Earlier you recover better. It is the project in which you recover your money earlier. The project for which payback period is less should be preferred over other. So this is what the payback period suggests. So based on that suggestion,
X.
which project will you accept?
Sir,
X, Y, or Z?
X.
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 What will be the second rank?
X is not accepted.
Y.
Y, and third rank will go to.
Y.
Z.
If you have
Z.
to rank these projects in order of their payback period, so first rank will go to X, second to Y, and third to Z. Okay. Now, having understood third part, first was meaning, second was calculation, third was decision. So decision is based on the calculation. Calculations say that 3 years time period is better than 3 years and 14 days, and 3 years 14 days are better than 4 years. So our answer will be for X. Now, having discussed the five things are to be discussed. What are these? Meaning, calculation, decision, merit, and demerit. Now, what are the merits of this method? This method must have some merits. What merits do you see in this method? Or okay, if you're not able to look at the merit, tell me what are the demerits of this method.
So it does not take into consideration like what we are getting after like the
It
payback
does.
period.
Number one, okay. Let we will prioritize them later. One of the demerits you have pointed out and correctly pointed out, it does not take into consideration the inflows that happen or inflows that a company receives after payback period. See, we have decided based on this, and 3 years is this one. Now, what is happening in fourth year and fifth year? These two data, 2 lakh and 1 lakh here, 1 lakh and 2 lakh here, 2 lakh and 4 lakh here, are not part of our decision making. We have totally ignored these 2 years figures in taking decisions. If we take a decision based on these 2 years figures also, then perhaps we may go for project Z. I'm not saying definitely perhaps, because we are receiving 4 lakh rupees here, which we are totally ignoring. We have stopped our calculations here. In last year, in case of Z, we are receiving 4 lakh. In case of X, we are receiving 1 lakh. So naturally, 4 is much, much better than 1 lakh. But this information we are not incorporating in the decision making. You're right. So this is one of the limitations. What is the other limitation? What is the other limitation? Other limitation could be
The time value of money is not
yes, okay,
considered.
very true, very very good. Time value of money is not being considered. We are making all calculation on the face value of 1 lakh, 1 lakh 50,000, 2 lakh, whatever are the face values. We are taking decision based on those face values. We are not looking at the time value of money, because in case of Y, this 2 lakh 50,000 we are receiving in the first year. Here we are receiving in the first year 1 lakh. Here we are receiving in the in first year. If you compare X and Y, if you compare X and Y only, then our decision is for X, but in reality, it should have been definitely for Y, because money 1 lakh received in first year or 2 lakh 50,000 rupees received in first year, there are a sea change between the two. But why is it happening? Because our criteria is payback. Our decision is based on the money that we are getting back in the up to the payback period. Okay, so this is the another demerit. What else? We are not taking present value into consideration. We are not taking inflows that happen after the payback period. We are also not taking into account the total inflows. Total inflows in this case are 9 lakh. In this case, total inflows in both the cases are 8 lakh only. But we have decided in favor of X because we stopped our calculation by the time or at a stage where we have recovered our money. No more calculations were made. So total inflows have also been ignored if we take our decision on the basis of payback period. What is the okay? Likewise, there can be several demerits. Come to some of the merits also. What could be the merit of this method? One
It is
merit.
easy to calculate.
Yes. Say it again.
Calculation part is easy.
Calculation part is easy. Okay. So one can say that it is one of the easier or easiest method of making calculations. No complicated calculations are required. Correct. What is the second merit? What else is the merit of this method?
Comparison between different projects is easy.
That you can do using any method. You have several methods. You have several projects. You have evaluated those projects on the basis of payback period. Once we discuss rest of the methods, same thing you can do with respect to other projects also using other methods. The another very important merit of this method is that it takes into account the risk factor. It takes into consideration the risk factor in all financial decisions, especially in unit 1. You must have read about the risk. Risk is associated with all financial decisions. Think of any financial decision that you are contemplating, and I can explain to you. You may also realize that there is an element of risk involved in the financial decision making. Take a simple example of depositing money in one of the two banks. Let us say one is State Bank of India, the other is a cooperative bank. In which bank do you think there will be more risk?
Cooperative bank.
Cooperative. Why will there be more risk in cooperative bank? Why do you think there will be more risk in a cooperative bank?
Because of private ownership.
Okay. Any other? Maybe a bit more explanation is required. I'll tell you, and then I'll ask you for the thing anyway. State Bank of India is one of the oldest bank, one of the largest banking system of our country, and backed by Government of India. There are several good thing about the State Bank, and therefore it is known. This is established, is very old, and it has branches all over the country, hundreds and thousands, an established name, and therefore the chances of it that it will go bankrupt easily are less compared to other banks. So people will be happy dealing with the State Bank of India compared to other, and then that means they have considered risk. Okay, instead of depositing money in bank for some generating some interest or some income, you you buy some shares. So there is a risk that the company may fail. You buy some gold. There is a risk that prices may go down. You take any other decision, either investing in bank, depositing in fixed, depositing in a, buying this, doing several financial decisions are possible. Every step that you take comes with the risk. Having understood little bit meaning of risk, it's not only this risk. There can be risk at at different types of risks. And suppose you are making an investment, and in February 2024, listen to my questions carefully. You wish to make an investment, and huge investment, let us say a company wishes to make in February 2024. Its consultants are suggesting that instead of making this investment in February, March 2024, invest this money in July 2024. Why are they suggesting so? I have given you two dates. Number one, you are thinking, or a firm
So because of the policies of the
policy of the
budget, sir.
project. Okay.
It's a
Budget. What are these two dates? Okay, fine. Because I said February 2024, you are right. Any other answer? If I say not February 2024, either April 2024 or June 2024. Why April and June? Because the general election is likely to happen in May 2024. Depending on the kind of government which is formed, the policies may continue or discontinue. So you carry a risk related to the political parties. Similarly, there can be several types of risk related to economy, related to political party, related to so many things. Now, the chapter is not on risk. The chapter is on, or the discussion is on payback period. By the way, before I proceed, what time do you have your next class today? Do you have a class today after 8:40?
Yes,
Sir,
sir.
OPM, sir.
Okay, then
Operations
immediately,
manager.
okay, then immediately you write your name in the chat box. Once you write your name in the chat box, hello, am I audible to all of you?
Yes, sir.
Okay, once you write your name in the chat
Yes,
box,
sir.
you may quit because you have a class. You should have reminded me before.
So those who have already written,
Those who are already, they need not. You are right. Those who have already written, why should they write again? They need not. Those who have not, they may please write.